All right, and here we are. All right, welcome back. I got to tell you, today is the end of a good 2 weeks. Exciting 2 weeks, actually, trading. After what I guess now is being called a mini spike on the VIX last week, we have had a couple days a row of a cooling off period. Today, another day, second day of cooling off, and I have to tell you, it's a relief to have the UVXY and volatility backing off. Now, what I've noticed is that, I'm looking at my camera and my viewfinder is not going right, but that's okay. I'm still recording it looks like here. Today we had an interesting day in the markets. We started with gold rallying, and so I was looking before the open. The NASDAQ was rallying. The ES futures were down a little bit, but gold was up. And so normally, if gold is up in a correlated market, if gold is up, then the equities are down. So when you have gold up and equities up, that's an uncorrelated market, and that tells you should be cautious, that change may be in the way, that either gold or the market could reverse itself at any point. I had to work today, my day job, but I was able to keep track of the market pretty well. UVXY closed yesterday at 1622, around that area. And right before the open, it had drifted down a little bit. It was just around 16. Right after the open, it kind of sold off. Excuse me. Now, I think today the markets were characterized by a slow, gradual sell-off. And although major indices were down, volatility came in a little bit. And it's the kind of thing where, like, vol was up for like 7 days in a row. And so it had built up, to, I guess, reaching a peak of around 14, and then it eased off. Today, it was in the mid-11s, the VIX was. But even with the market down, the air was getting let out of the balloon, and VIX was down, and UVXY came in. Now, as the day was getting towards the end, the NASDAQ felt like it was just pulling things down. At one point, the NASDAQ was down 20, and it looked like the VIX was going to rally to unchanged. I really think that if this hadn't been a Friday, that the market really could have turned over and volatility could have gone higher. But since it was a Friday, then we saw, we knew the weekend was coming and everything was going to be sort of reset. Because when weekends come, it kind of gives a break in the narrative, and it can kind of dampen any momentum one way or the other. But it definitely looked a little scary this afternoon. Even though my position was going my way and volatility was coming in, the markets looked a little heavy, and I think it had the potential to go lower. So that was a little bit frightening. I had a lot of problems with my brokerage. Now, I use TD Ameritrade currently, and I can imagine for new traders how difficult it must be, because trading is a world of chaos, and not only because execution doesn't always work the way you hope it will. The internet can go down, your programs cannot work, but also, especially when it comes to selling options, and especially when you have a smaller account, which many of us have, you have to deal with limited capital. And the way it works in most brokerages is that you have a certain amount of buying power, and if you're short options, then the formula for that buying power is dependent on the price of a stock. And if you're short calls, as the stock rallies, you need more money on account to cover those short calls. And so you have to be aware of that. So you want to leave some excess money in your account to so that you'll have enough buying power if the stock rallies. Anyway, I've been having issues because my account, I can pull up my account on many different spots. I have 2 apps for TD Ameritrade on my cell phone, and then I've got 3 different trading platforms over the computer. There's the Thinkorswim, there's Trade Architect, and then there's this just sort of basic TD Ameritrade order entry and platform that has Greeks and stuff. Now, the one TD Ameritrade Thinkorswim platform, for some reason, was saying that I was in margin call, but all the other platforms were saying I wasn't. And so, which one do you believe? And this has been going on for weeks now. It's like several days during the week, it'll say I'm in a margin call for TD, for Thinkorswim, and I'll call them and they'll say, oh, no, you're not in margin call. Well, today this was happening again, and I called them. They put me on hold for a while, and finally they said, no, your account's fine. But then about 2 hours later, they left me a voicemail saying, urgent call, you're in margin, you need to put up $2,000 to get out of margin. And it's just very perplexing. And I can imagine for a new trader it would be even more perplexing. What a lot of traders do is they maintain a couple different brokerage accounts because you never know which one's going to have the best rates, which one's going to change their structure somehow. And so you kind of have to move around. Now, I'm facing a situation where I'm probably going to have to move again now because it seems to be a trend that brokerages don't really understand volatility products and the risk, and so they make it more and more difficult to short volatility. The Scottrade, which was pretty good for shorting stock, merged with TD Ameritrade recently, and so they're still kind of in a merger, so you're kind of limited in what options trades you can do with them. Interactive Brokerage, which was a good one for shorting stock. If you're a really small trader, it's hard because you have to have a minimum of $10,000 in your account to open an account with them. But they were pretty good, but all of a sudden they've introduced these increased margin requirements for trading the VIX and VIX-related products. Now, that's a big problem when you don't have much money and you're trying to allocate your capital, and you're trying to take, what I try to do is take intelligent risk, but you need to take risk if you want to make money. And when they limit, when they add these, these more hoops to jump through as far as how much money you have to put up, it limits the amount of risk you can take and thus limits your profitability potential. So it can be hard to try to trade your position, think ahead to what strategies you want to have on, and have to deal with these changing margin requirements. Now, when I first started trading, there was an expiration for options once a month. Now there's an expiration every week. So every Friday is an expirations day. And so on a Friday, you need to, if you have a position in the front week options, you need to evaluate what your position is going to be come Monday when those options expire. Currently, having a position where I was short out of the money calls in back months, I will at times buy some cheap weekly premium, buy some cheap out of the money calls, like let's say calls that cost maybe $10 or $20 to limit my upside risk in the event of a huge spike or something. And what this does is that when I evaluate my risk for a big move, like up 85%, for example, I can vastly decrease my risk by paying $20, $50, $100 to buy some of these calls. So I have to go through that evaluation and see what I need to do to set up for the next Monday every Friday, and also juggle my non-trading job. So it can get a bit hectic. And with them calling me about margin and all this other stuff, it was hectic as well. But I kept a smile on my face because I knew the positions were going my way and I knew I was making money. But it can be very frustrating. I'm considering making the move to Tastyworks. Now, those guys, the Tastywork guys are really cool, and they've been a great benefit to options trading and to retail options traders. They've taught a whole generation of people how to trade options, and I can't say enough good stuff about their videos on YouTube and the whole Tasty Works. They have a live show every day, and those guys are really awesome. I definitely know some of the people from the SIBO from that group. I know there's two women traders who do a show at noon. I think it's Liz and Jen, and I definitely recognize them from the SIBO. I did not know Tom, the head guy from Tasty Works from the SIBO. He was an OEX trader, and I think BAT was an OEX trader too. I was in the equity, so they were nearby, but I didn't know them specifically. But they seem to have a much clearer setup as far as parameters for risk. Now, when it comes to margin, there's specific requirements that are set up by the exchange, but many brokerages go above and beyond that and have their own restrictions. So, for example, TD Ameritrade, you need to have at least $5,000 in your account to be able to sell options, whereas that's not really an exchange rule, but it's just TD Ameritrade's rule. And they've had these increased requirements where they're going to model your risk for certain moves, and they won't tell me exactly what the requirements are. At one point, they called me and said, well, your risk for an 85% move has to be less than the value of your account, which seems reasonable to me. So let's say you have a $100,000 account. Then if the stock goes up 85%, you have to have less than $100,000 risk if that's the value of your account, which seems reasonable to me, like I said. But I was well within those parameters today when I got this margin call again. So it's very frustrating because the last thing you want when you're taking risk is at that important moment where you need to hang tough and where you have the most risk. You don't need a tap on your shoulder and be forced to cover at that price, because that's the way you lose money. So I'm finding that I just need to be very small in my trade so that there's plenty of room to maneuver if things get to an extreme. Now, that's always a good idea, but you want to know where your points are, and it's really frustrating today because I can't get a clear answer from TD Ameritrade exactly how they're evaluating my risk and how they're evaluating what sort of margin requirement I need to put up. And I know it's not a Reg T thing, and I know it's not an exchange thing. It's just their own internal things. Now, and I'm not sure if they're even I've never had them actually force me to cover my position or had them go in and do something against my instructions. They did call me once and say, you need to cover this X amount of risk by 1 o'clock or we're going to take action. And at that point, it was like 12. They gave me an hour. And I said, okay. And I sort of negotiated with the risk guy there and said, okay, well, if I buy this many calls in, will that satisfy you? And he said, yes, you need to buy X amount of calls in to satisfy us. And he gave me a formula, which, once again, I said it was that my the value of my account had to be more than how much I'd lose for an 85% up or down move in the underlying. Now with UVXY, it's a up move because my risk is always to the upside. As a trader, I don't look really at and think about, how much money I'm going to make. I don't go out. I don't set out to make an X amount of money. What I do is I set out to see the opportunity, see what the best opportunity of whatever choices present themselves is, and I try to judge that opportunity and see what kind of size I would like to do at that point. And then once I have a position on, I'm focused on where my risk is and how I can manage that risk. And so it's usually looking at limiting my risk of losing money. That's what I focus 90% of my trading time on, is what's the best way to mitigate my risk. Now, before, as a market maker, I was basically on the other side of many trades. So whatever the sum total of everybody's trades who came into the pit was, the opposite of that was my position. And so I sort of ended up with a certain position, and I had to try to manage the risk as best I could. So that's the place I came from. Now, being a retail customer, I can sort of pick or choose which trades I make. And so it's a little bit different game. But in the end, I have a position, and I need to manage whatever risk I have. So it's been an exciting few months, and I'm happy that things have worked out this last week, but I feel that I'm probably going to need to make a change as far as brokerage. And this is a pretty common thing from talking with people. My experience isn't that much different than many other people's I know, because I talk to them every day. StockTwits has been a great thing for me because I can compare notes with other traders, and it really helps me get a perspective as to where I fit in on the spectrum. And there's plenty of people much bigger than me and much smaller than me on StockTwits. I don't generally discuss my P&L or exactly what size I trade. I don't think that's cool. I'm sort of superstitious as far as discussing money, and also I just don't think it's a cool thing to discuss specific numbers with people. I'm certainly willing to discuss strategy and size at different prices and that sort of thing. But it's strange. So many people online in the retail world brag about how much they make, and they also like to really take sides and be part of a team. It's almost like in politics where people want to be a Democrat or Republican and they stick with their sort of tribe. It's kind of like that on StockTwits where there's longs and shorts, and all the longs kind of bond together and all the shorts kind of bond together. And this doesn't just happen on the UVXY forum. It happens on all kinds of different stocks. And that's very different from on the floor. On the floor, people generally don't discuss their positions with people outside of their own company. And people keep, they keep stuff kind of a lot tighter to the vest on the floor. And there's no animosity towards someone with a different position than yours. I mean, people choose whatever position they want to put on, and they either make money or lose money, but it doesn't really affect me directly what position a person across from me has. It's not like that. It's not like the only person that I'm trading with is that one person who has the opposite position of mine. So I find it really silly how people get mad or get frustrated with people that have a different position than them. I read a post on StockTwits the other day. It said, shorts deserve to lose 200% of their money. Somehow, because you're positioned a certain way, you deserve a certain result. That's funny. I remember being at the CBOE in Chicago, and the peso had sold off, and there were people outside the CBO. There were Mexican people outside the CBO and Mexican Americans protesting because they thought that traders had brought the peso down, had sold the peso and brought it down, and it was sort of somebody's fault inside that building that the peso was going down. And it's funny how people sort of misunderstand that traders don't really dictate individually which way things go. I mean, I'm sure there's been certain huge traders in sometime that have done that, cornering the silver market or that sort of thing. But in general, we're all just little teeny cogs in the wheel trying to make our buck here or there. The other concept that sort of relates to that I find funny is people saying, "Oh, it's un-American or it's unpatriotic to be short something." People don't understand that traders, whether short or long or day traders, if they hold it for 10 seconds or 10 years, traders provide liquidity and are sort of the grease that makes our markets move. Without traders, you wouldn't be able to get in and out. And shorting something or being long it is no less patriotic either way. It's all just part of a market. There's buyers and sellers at every price. This sort of misunderstanding is what made Congress put in the pattern day trading rules to discourage people from day trading. And it's really silliness because day trading provides liquidity and helps make a more healthy market. And they, on purpose, have put stuff in place to discourage that because they don't understand how things work, which is too bad. Anyway, I've I sort of have worked on my setup here a little bit, but I wanted to get out and just start broadcasting because, you could change your microphone or change a light or somehow change where you're sitting or something. But the most important part is content, and I'm eager to put out content. So I said, okay, well, I'm just going to run with whatever setup I have and go from there. Now, I am looking to get some people to come on the program. I think I'll start with a sort of Skype discussion. I'm going to have to change my setup a little bit to do that. I might do sort of a thing with me sitting on the webcam and then have a split screen with a Skype window so that we can have a discussion with somebody. That might be pretty cool. If you have ideas or you'd like to get involved, feel free to reach out to me either on StockTwits or through the YouTube channel. I do have some up-and-coming things getting lined up. I wanted to sort of put out a little bit of content first just to get the rust out of the system a little bit. I did direct a talk show on public access TV for a little while a couple years ago, and I do have the technical skills to pull this stuff off, but I want to make it as comfortable as possible for somebody who I'm interviewing or who comes in and sits with me here so they can feel comfortable as possible in a somewhat alien environment to them. I guess as comfortable as you can feel when you have a camera pointed in your face and a microphone and bright lights on you. Anyway, I wanted to get a little video out today before the weekend because it has been an exciting week, and it did sort of end on a sort of a questionable ending because of the sort of sell-off into the close. So I think we may see continued volatility next week. With all that margin stuff, the guy said to me, you don't have to do anything as long as you you deal with this sometime Monday during the day. But I did actually take it sort of as a sign that maybe I should lock in some of the profits I made this week and take a little bit of my position off. So I did take a little bit of my position off on the close, and it sort of came off the lows right after I did that. So that sort of made me feel good about doing that. So you'll hear from me again, I think early next week, and we'll keep this going, and we're going to get some other people involved because it's a lot more fun to have a conversation than to just listen to me all the time, for me and for everybody else, I'm sure. Anyway, thanks a lot for watching, and get involved. We're going to have some fun here.